No one keeps billion-dollar secrets better than Warren Buffett. As of last month, however, the cat is finally out of the bag. Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, has just spilled the beans on his latest big bet. It's none other than Chubb, the insurance giant. Stay to the end of this video to discover a shocking and controversial fact about Chubb. In a jaw-dropping move, Berkshire Hathaway disclosed that it scooped up a whopping 26 million shares of Chubb in a recent SEC filing. Buffett's secret investment, which has been shrouded in mystery since last year, is now out in the open for all to see. The value of this bold move? A cool $6.7 billion, give or take a few hundred million. Not too shabby for a company that's been around for over 140 years and is known for its expertise in property and casualty insurance, as well as life insurance and reinsurance. But that name, Chubb, did they think this through? Okay. So what does this mean for the average Joe and Jane investor? Well, if history is any indication, Buffett's stamp of approval could send Chubb stock soaring to new heights. And as you will see, it did. Because when the Oracle of Omaha makes a move, people tend to sit up and take notice. Keep an eye on the markets and see how this blockbuster revelation plays out. What we know already is that Buffett has amassed a sizable following of investors who mimic his portfolio moves. Berkshire Hathaway's stake in Chubb is no exception. Chubb stock skyrocketed by more than 8% in after-hours trading on Wednesday. As of this recording, Chubb stock is up 36.19% for the year. Buffett is a champion poker player impossible to read, and in his hand is all stocks that make him billions. This is why. Warren Buffett's Berkshire Hathaway managed to keep its investment in Chubb under wraps by requesting confidential treatment from the SEC. This allowed the company to quietly build its stake in Chubb without tipping off the public. This is the legal and the proverbial playing poker your cards close to the vest. How does one get the SEC to allow you to keep billions of dollars in share acquisition a secret anyways? I'll tell you. You have to write a letter and ask the SEC nicely to allow you to keep a secret. It's easy. You must send a paper application to the Office of the Secretary, where you can raise a ruckus and object to the public disclosure of your precious stock trading secrets. It's all part of the game, baby. Rules 406 and 24B2 are watching your every move, so make sure you play by their playbook. Warren Buffett's latest move is actually a blast from the past. You see, insurance companies are old hat for Buffett. After all, Berkshire Hathaway already owns Geico, National Indemnity, and General Re. But Chubb is a different beast altogether, and Buffett's decision to take a stake in the company has everyone talking. Stay to end of this video to see what makes Chubb so irresistible to Berkshire Hathaway. Chubb is just the tip of the iceberg. It seems like Buffett is all about financial companies these days, with investments in Ally Financial, American Express, and Bank of America. But he's not afraid to trim the fat either. Berkshire has been cutting back on consumer products. In a surprising move, Berkshire sold off 10 million shares of Apple in the first quarter of the year, though the tech giant remains its largest investment. If you want to learn more about what happened with Apple, catch my other video about Warren Buffett dumping Apple stock. Please also like and subscribe for more knowledge about Warren Buffett, business, and investing. In the fourth quarter of 2023, Berkshire slashed its holdings in printer company HP by a whopping 78%, selling off 80 million shares. So why Chubb? Insurance is boring, right? Chubb isn't just any old insurance company. It's a force to be reckoned with on the international stage. With operations in 54 countries, this company is poised for growth like never before. This is indication of great leadership, which we all know Buffett loves. Chubb also has a track record of success. We're talking about a company that consistently turns a profit on its insurance business, grows its earnings like nobody's business, and knows how to reward its shareholders with dividends and stock buybacks. Insurance companies make a ton of profit on underwriting. This is how it works. An insurance company will collect a premium before any claim could be made. They then float the premium to make profit. Nobody seems to do this better than Chubb. This is crucial and has not gone unnoticed. Chubb also has a rock-solid balance sheet. This company is built to weather any storm. And with most of its investment portfolio in bonds, it's a safe bet in a world where the stock market is reaching new heights. Okay, so what is the controversy, you ask? Chubb made waves in March when it decided to play with fire and underwrite President Donald Trump's whopping $92 million appeal bond in the Jean Carroll defamation lawsuit. This has created a political firestorm, since anything these days tied to Donald Trump triggers half of our nation. What do you think of this? Leave a comment below, and thanks for watching.